Welcome to XM.com. You're watching today's market comment by Rafi Boyajian. I'm Christina Marujos. Shares on Wall Street ended the month at an all-time high on Thursday and are set to maintain the buoyant mood in March as a summer rate cut in the United States looks more certain. The all-important core PCE price index eased slightly to 2.8% year-on-year in January. A sharp slowdown in consumer spending during the month and a slight pickup in weekly jobless claims probably offset any concerns about sticky services inflation. However, what likely reinforced the optimism in equity markets is the unified message from the Fed that whilst there is no urgency to cut rates right now, looser policy will likely be necessary later in the year, and that 3 rate cuts remains the baseline scenario. But if there's anything that can spoil the positive tone, it's more likely to be the ISM manufacturing PMI that's also coming up, as its price-paid component is forecast to edge up for the second straight month. U.S. futures were last trading in positive territory following record closes for the S&P 500 and NASDAQ 100 on Thursday. The U.S. dollar initially fell after the PCE inflation numbers, but soon reversed higher to finish up on the day. Month-end flows probably contributed to the choppy trading in the FX market on Thursday. The euro received a double boost on Friday from upward revisions to the February manufacturing PMIs, as well as hotter than expected Eurozone inflation figures. The euro area's manufacturing PMI was revised up to 46.5, indicating a lesser contraction than previously thought. More importantly, inflation across the bloc fell less than expected in February to 2.6%. The ECB meets next week for its March policy meeting and may refrain from signaling a rate cut soon following the CPI data. The euro was last trading slightly firmer, just above the $108 mark. Bank of Japan Governor Kazuo Ueda dismissed the idea that the central bank was within reach of its 2% inflation target, countering comments made yesterday from board member Takada. Ueda maintained his stance that much will depend on the outcome of this year's spring wage negotiations. Hence, a rate hike is still possible, but far from being guaranteed. The yen slid on Ueda's remarks overnight, reversing the prior day's gains, with the dollar recovering back above 150 yen. This was today's market comment here at XM.com.